Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, thank you for clicking to this, okay? Ensure you like, comment, share, subscribe, and follow us on our platform. Now, I want to say a question on double taxation relief. Now, before the ICAN May 2024 exam, we treated double taxation relief, and it was set in the ICAN May 2024 in advanced taxation, okay, for the professional level. So we're going to see that. We're going to see the solution for that. So ensure you are subscribed to this channel because we're going to look at that. Okay. Now I want to see the Imo State University PhD students, their advanced tax management and fiscal policies, which is 921. They have a question on double taxation relief. Now let's see the question. Now the question said, Carl International Limited runs a business both in Nigeria and Liberia. The company operating results for the year ended 31st December 2003 were as follows. Now we have income from Nigeria, 25 million. Income from Liberia, 11 million. The total income is 36 million. Now less overhead, 20 million. Then we have a net profit of 16 million. Included in the overhead, A. Depreciation, Nigerian business, 2,250,000. B. Depreciation, Liberia business, 375,000. C. Donations to club in Nigeria, 125,000. And D. Foreign tax suffered, 2,100,000. Profit attributable to Liberia business is 2,575,000. Now, it said capital allowances are agreed with tax officials for Nigeria and Liberia business were 1,770,000 and 725,000 respectively. Assume the company is a wholly Nigerian company, wholly, okay? Required, compute the tax liabilities on the total income, stating clearly the double taxation relief applicable to the company. So we should compute the tax liabilities and also state the relief that is applicable to the company. Now this is 2021/2022 section for the PhD students in Imo State University. Now we're going to see how to solve that question. Okay, so now from here now, write the owners of this, which is the Carl International Limited. Okay, so we're gonna have this is our total, and this is Liberia, and this is Nigeria. Okay, so now let's solve this now. Now, if you go to the question, you will see that they have a net profit of 16 million. Okay, net profit 60 million. We're supposed to start from that. So we have net profit. Now, if you notice in the question, this particular question, it wasn't splitted like the previous one we did. Okay, the total was given. So it means the total for the net profit is 16 million. Okay, is naira, 16 million. Now, if it is 16 million, also once you read down at the question, they said profit attributable to Liberia business. Profit attributable to Liberia business is 2,575,000. So it means the Liberia business, the net profit that's attributable is 2,575,000. Okay, so if the total is this and Liberia business have this, it means Nigeria own will be 16 million minus this, which will give that of Nigeria as 13,425,000. Okay, so that is the net profit for Nigeria. So Nigeria, Liberia, and the total. Now we're going to add back some non-allowable expenses. So we said add back. Now the first item there we're going to add back is the depreciation. Okay, we have depreciation. Depreciation, if you check, they said included in the overhead because they gave us a total overhead of 20 million. So they broke the overhead down. What comprised the totality of that overhead? So we said the first one, the depreciation for Nigerian business is 2,250,000. So it is 2,250,000. Okay, for Nigeria. The next one, Liberia, is 375,000. That's 375,000. So if you add this plus this, it will give us a total of 2,625,000 as the depreciation. Okay. Now the next one, donations to club in Nigeria. So we're adding back donations to club. Okay. Donations to club in Nigeria, for only Nigeria, not for Liberia, is 125,000. So it is not allowable. It is being added back. So 125,000. Okay. So we have this. Then our total here is 125,000. Now the next one, we have foreign tax suffered. Foreign tax suffered, which is 2,100,000. So we're adding back foreign tax suffered. Okay, and foreign tax suffered was paid in Liberia, which is 2,100,000. Okay, 2,100,000. So those are the expenses we're adding back. So we're going to get the total. So this will give us 2,100,000. So we're going to get the total. Now, if you add 30,425,000 plus 2,250,000 plus 125,000, it will give us 15,800,000. Okay, and if you add 2,575,000, 375,000, and 2,100,000, it is 5,050,000. And we add the total, this plus this plus this plus this, it will give us 20,850,000. Okay, so now the next thing to less, we're going to less the capital allowance. Okay, the capital allowance. That's the capital allowance. Now, if you check there in the additional information, it said the capital allowances agreed with tax officials for Nigeria and Liberia business were 1,770,000 and 725,000 respectively. So 1,770,000 is for Nigeria, while that of Liberia is 725,000. Okay, so that's the capital allowance. So if we add this plus this, it will give us 2,495,000. 2,495,000. So now this minus this will give us 14,030,000. 14,030,000. While this minus this will give us 4,325,000. And this minus this, which is the total, is giving us 18,355,000. Okay, so that is the tax, the adjusted profit. So we're now going to have the income tax payable. So how much is to be paid, supposed to be paid as tax? So our tax rate is 30% times this amount, which is 18,355,000. Okay, and if we do that, 30% on this will give us 5,506,500. 5,506,500. Okay, so this is the tax that is supposed to be paid. Okay, the tax that is supposed to be paid. Now, but they said they'll have a relief, okay, a normal relief. So we said less double taxation relief. Less double taxation relief. Now, what will not be the relief? And let's do the adjustment here for the relief. Okay, now let's do the adjustment here for the relief. Now, if you watch here, now we want to know the relief rate that we use. Okay, the relief rate. Now, of course, we know that the Nigerian rate is 30%. So half of Nigerian rate is 15%. Okay, so half of Nigerian rate is 15%. Now let's know the Commonwealth rate. So the Commonwealth rate, how do we calculate that? So it becomes the foreign tax paid over the total foreign profit. Total foreign profit times 100 over 1. So that is how we can get the Commonwealth rate. Then compare the Nigerian rate and the Commonwealth rate, okay, to know the relief rate to use. We have conditions for that. Okay, so now the foreign tax paid. Now they said the foreign tax suffered is 2,100,000. 2,100,000 divided by the total foreign profit. And this is the foreign profit. This is foreign Liberia, which is 4,325,000 times 100 over 1. So if we compute this now using our calculator, we're going to have 48.6%. Okay, 48.6%. Now, this 48.6%. Now we're going to come to a conclusion. Say, but the conditions that was given to us, they said if the Commonwealth rate is greater than the half Nigerian rate, our relief will be the half Nigerian rate. And this is one of the conditions. And they said if the Commonwealth rate is greater than half Nigerian rate, the relief will be half Nigerian rate. And this is the Commonwealth rate, 48.6. So say that is 48.6% is greater than the half Nigerian rate is 15%. So half is greater than 15%. Now what is the relief? The relief now should be half Nigerian rate. Now said, therefore, the relief is the 15%. Okay, so the relief is 15% on the income. So I'll say therefore our relief will not be 15%, that's 15 over 100 times the foreign income, which is 4,325,000. 4,325,000. So 50% on this using our calculator will give us 648,750. 648,750. Okay, 648,750. So that is the relief amount. So when I say let's double taxation relief, having done this, so remember we can call this note AB, note B, or note T, so that when you see it. So the less taxation double taxation relief is 648,750. So instead of paying this, they are giving them a relief on this. So this minus this, using my calculator, will give me 4,857,750. So this is the tax liability. This is the tax liability of the Carl International Limited. So instead of paying this, giving them a relief based on the foreign income, and this is what they're supposed to pay. Okay, now this is the 2021/2022 question for PhD student of Imo State University. We have done justice to. So we are going to see that of the ICAN, the double taxation question that was set in ICAN. So ensure you have subscribed, like, comment, share. Comment where you're watching me from. Okay, thank you. Follow us on our platform. We're on Facebook, on Instagram, on TikTok. Thank you very much.